Hey everyone, welcome back to the Noob Selling Options channel. I am so glad you're here today because we are diving straight into an absolutely massive explainer covering our Week 9 performance. If you've been following our journey for a while, you know we've been working hard to build a highly targeted, almost mechanical income-generating machine. Well, the Week 9 data is officially in, and honestly, it's pretty eye-opening. Today, we're going to look under the hood at the exact trades, the core portfolio allocations, and a major strategy shift we made that is completely redefining how we perform against the broader market. So, grab your notepads, settle in, because the numbers we are unpacking today are incredibly exciting.
Okay, let's dive right into this. $4,711. I just want you to take a second and let that number sink in. That right there is our currently booked profit and loss for Week 9 alone. This isn't some theoretical backtesting, and it's definitely not a hypothetical projection. This is actual, realized, booked capital generated in just one single week. You know, when we first set out to build this weekly income engine, our ultimate goal was consistency and really aggressive capital generation. So hitting a number like $4,711, especially in the kind of turbulent market environment we've been seeing, it really proves that the mechanics of our strategy are firing on all cylinders. But you might be wondering, how exactly did we get here?
To answer that, we have to look at the raw Week 9 ledger. These 35 distinct active trade lines you're looking at, that is where the real magic happens. We are all about total transparency on this channel, and this ledger is the undeniable proof of concept. It's essentially a very meticulous mix of cash-secured puts, which, if you remember, is basically getting paid to promise to buy a stock at a lower price, and covered calls, which is getting paid to promise to sell it later. Every single line item here is a highly deliberate step in our weekly income-generating mechanism. It's high-volume premium harvesting in action across a very carefully selected group of tickers.
Now, when we break down these profits, it really reveals the heavy lifters for Week 9. Our absolute biggest single winner was ETHB, delivering a massive $1,245, and that was purely from a strategic buy and sell swing. But look right below that. We have Intel, INTC pulling in $678, and RAM right on its heels at $665. What's really fascinating to me about this is how the share swings, like ETHB, drove the bulk of the upfront profits. But that effort was perfectly complemented by this massive, high-volume premium harvesting on INTC and RAM. I mean, for Intel alone, we collected premiums across multiple put positions ranging anywhere from the $91.50 to $97 strikes. It is this exact combination, opportunistic swings paired with just relentless premium collection, that actually builds a $4,700 week.
But guys, here is where it gets really exciting, because Week 9 isn't entirely closed out just yet. We have a massive milestone sitting right in front of us, the $5,000 mark. We're currently sitting at that $4,711 books, right? Well, our CRCL position is the absolute linchpin here. We currently hold 100 shares of CRCL at an entry price of $81, and we went ahead and sold an $85 strike covered call on it, collecting a $112 premium up front. So if CRCL manages to close above $85 tonight at expiry, those 100 shares get called away cleanly. We keep the $112 premium we already pocketed, plus we capture a solid $400 capital gain from the share appreciation. That total injection pushes our Week 9 profit well past the $5,000 milestone. It's literally the perfect setup, and we are quite frankly on the edge of our seats waiting for the closing bell today.
So why are we working so incredibly hard to generate this $4 to $5 grand in weekly cash flow? I mean, we aren't just trading for the sake of trading, right? This actually brings us to the macro blueprint of the whole noob selling options strategy. The entire, absolutely crucial point of this aggressive weekly income engine is to continuously fund the purchase of long-term, high-conviction assets for our core holdings. Every single premium we collect, every successful swing trade we execute, it all gets funneled directly into building a fortress of core assets. We are essentially using the market's own volatility to finance our long-term wealth accumulation. It's like a perpetual motion machine for your portfolio.
Let's move over to the core portfolio ledger and see how this builds out in reality, because this strategy builds a very real, very solid foundation. Looking at this raw ledger, we have built a net worth base of over $153,000. You can literally see the actual entry prices and asset quantities right here. We are actively accumulating shares in absolute powerhouse companies like Meta, ServiceNow, Amazon, Alphabet, Broadcom, and Intel. But we don't stop there. We are also heavily invested in digital assets and crypto infrastructure, things like Bitcoin, Coinbase, and Iris Energy. By having all these entry points meticulously tracked, we know exactly where our capital is being deployed and at what cost basis. This ledger right here, this is the living, breathing result of our weekly grind.
And when we break down this portfolio visually, you'll see we have very heavy high-conviction weightings across three main sectors. Almost 30% of our capital is deployed straight into semiconductors and electronic components. Then another massive 25.6% is allocated to digital assets and crypto infrastructure. Right behind that is our mega-cap tech and enterprise software sitting at 23.6%. Now notice we also maintain a very healthy cash reserve of 13.4%. That cash is absolutely critical for deploying those cash-secured puts and capitalizing on sudden market dips when they happen. So as you can see, this isn't some broadly diluted index fund. This is a highly concentrated, specialized portfolio built for extreme growth and aggressive income generation.
Now, building a highly concentrated portfolio sounds amazing in theory, right? But how does it actually perform when the pressure is on and the market gets rough? To answer that, we have to rewind a bit and look back to June 22nd. June 22nd was a really pivotal date for this channel because it marked the official launch of this specific weekly income generating strategy. That's when we shifted our mechanics to focus aggressively on the wheel strategy, meaning we systematically sell puts to acquire stock at a discount and then turn around and sell calls to generate income off those holdings, all to fund our core assets. And since that specific date, the broader market has been put through the absolute ringer. So we have the ultimate test case here. How did our specialized, tailored strategy hold up against those broader market forces? Well, this right here brilliantly illustrates the answer. And I have to say the contrast is incredibly stark. Since June 22nd, the Nasdaq 100, the NDX, literally bled red. It dropped over 1,100 points to post a negative 3.74% return. It was a really tough period for tech broadly. But our tailored portfolio? It surged into the green by a staggering positive 25.31% over that exact same time frame. Let that sink in. While the broader market was pulling back and wiping out wealth for a lot of people, our portfolio was relentlessly climbing. This, right here, is the stark difference between passively holding an index fund hoping for the best and actively managing an income-generating mechanism on high-conviction assets.
But hey, let's anchor those percentage claims with the hard, cold data. Because percentages are one thing, but actual cash is another. This performance comparison sheet shows the absolute dollars and cents. Starting from a balance of roughly 168,000 Singapore dollars on June 22nd, we navigated our way up to over 206,000 by August 20th. When we mathematically adjust for our cash flows, which included a $5,000 deposit and an $8,888 withdrawal, we arrive at a massive, true trading profit of positive $42,567.46 Singapore dollars. That is absolute gain generated in a window where the Nasdaq 100 literally lost value. It proves that this strategy isn't just slightly beating the market, it's practically ignoring the market's downward gravity altogether.
So what does this all mean for you? What should you take away from all this data for your own financial journey? Well, it boils down to these core takeaways. First off, running the wheel strategy on mega-cap tech and high-conviction names absolutely works. Second, high-volume premium harvesting provides this beautiful, constant influx of cash. Third, and I think this is perhaps the most important point, this approach actively insulates the portfolio from broader macroeconomic drawdowns. Because we are constantly, relentlessly lowering our cost basis through those collected premiums, we can weather the kinds of storms that completely sink traditional portfolios. And finally, remember that all of this serves one ultimate goal: the continuous, aggressive accumulation of our core assets.
Which brings us right back to tonight's epic cliffhanger. The strategy is clearly working. The portfolio is crushing the Nasdaq. Week 9 is already a massive win, locking in over $4,700. But the final burning question remains: will CRCL hold the line? Will it cross that $85 threshold tonight and shatter our $5,000 weekly milestone? We are going to find out very soon. If you want to see the result of this exact trade, and if you want to learn step-by-step how to implement this weekly income engine for yourself, you absolutely need to be along for the ride. So please, take a second to hit that like button, subscribe to the Noob Selling Options channel, and turn on those notifications so you don't miss our next update. This financial journey is really just getting started, and you definitely won't want to miss what we build together in Week 10. Thank you so much for joining me today, and I will see you all in the next explainer.